Good afternoon, dear friends. We have been learning the various provisions of the Income Tax Act under the head Income from Other Sources. In our last discussion, we learned that there are 8 types of income which are included under this head Income from Other Sources, which means that these types of incomes are chargeable to tax under this head. And we discussed 3 types of income, that is the dividend income, winning from lotteries, or income derived on account of horse races, betting, gambling. Then third type of income we discussed was the income which is earned by way of letting out the plant, machinery or furniture along with the building. So these 3 types of incomes we just discussed in detail. We learned the various provisions of the Act, and we also learned the treatment of these incomes under the Income Tax Act, particularly with reference to this head, means computation of income under the head Other Sources. Now the next type of income is the interest on securities. You can say this is the 4th item which we are just going to discuss today. Interest on security, according to subsection 28B of section 2, the interest on security means interest on any security which has been issued by central government or by the state government. It may also include the interest on debentures or other securities for the money issued by or on behalf of the local authority or a company or a corporation which has been established by the central or state or provincial act. So this is something about the definition. In a nutshell, we can say that interest on security means central government security, state government security, or debentures or other securities for the purpose of money issued by the company. Now, the treatment of the interest on security will depend on whether these securities are held as a stock in trade or they are held as an investment. Now, if the securities are held as a stock in trade, then the interest which is received shall be taxed under the head profit and gains of business and profession. But if the securities are held as an investment, then the interest on security shall be taxed under the head income from other sources. So the treatment of interest on security is different from the treatment of dividend. In the case of dividend, we learned that if the dividend income is earned, is received, then it is taxable under this head only, irrespective of the fact whether the securities or the shares they are held as a stock in trade or they are held as investment. But here the treatment is different. If we are just holding the securities as a stock in trade, then the interest income which has been earned shall be treated as income from business and profession. But if you are just holding the security as an investment, then the interest on security shall be taxed under this head, that is the income from other sources. Now, in computing the income, any commission or remuneration which has been paid by the SSC to earn the income shall be allowed as an expenses from this income. In case the interest is payable by the central or the state government, then it shall always be deemed to accrue or arise in India, and accordingly it shall be taxable for all kinds of assessees. It means irrespective of the residential status of the assessee. Now, if the interest is payable by a resident person, then it shall be deemed to accrue or arise in India and shall be taxable in India. But if money is borrowed and is used by the resident person for following purposes, then the interest income is not deemed to accrue or arise in India. And what are those purposes? Number one, this is very important provision, for the purpose of business or profession outside India. It means in this case, then the interest income shall not be deemed to accrue or arise in India. The other purpose is for the purpose of making or earning money from the source outside of India. It means in both the cases they are concerned with the business or profession outside India, or they may be in respect of the sources for making or earning money outside India. In these two cases, the interest income shall not be deemed to accrue or arise in India. One important thing about the computation of interest or the treatment of interest on security is that the interest on security does not accrue on day-to-day basis. So the interest shall be chargeable, shall be taxable for the full period for which the interest has been paid, irrespective of the fact that the securities are held by the assessees for a lesser period. It means there may be a situation when the assessee may be holding for the period lesser than the period for which he has got the interest, but he will have to pay the tax on the interest for this full period. So the interest incomes which are exempt from tax are specifically given under subsection 15 of section 10, and some of the exempted incomes are as under. These are just examples. The examples are the interest on post office saving bank account, interest on fixed deposits of government or post office, interest on capital investment bonds, interest on relief bonds, or interest on PPF account, means public provident fund account. So these are some of the incomes which are exempt under section 10 subsection 15 of the Income Tax Act. So that's all about the treatment of income on account of interest on securities. Now we will just switch over to next type of income. We will just try to learn what are the provisions of the Act for the treatment of such income. The next income is the amount or the sum which is received under a Keyman Insurance Policy, including bonus on such policy. Now the treatment of such income can be discussed as under: if the amount is received by a company, then it shall be taxable as profit and gains of business and profession, and that would be chargeable under section 28, means it will be deemed to be business income. Now if the employer of the company receives such amount on account of Keyman Insurance, then naturally it will be taxable as a profit in lieu of salary under section 17 subsection 3. Now in fact the amount under this head shall be taxable or chargeable only when it does not fall in any of the aforesaid two categories. Now what can be that situation? Such a situation can be when the policy is taken on the chairman of the company or a director of the company, where the employer and the employee relationship does not subsist. So only in that case the amount received from the insurance company as a Keyman policy on account of Keyman Insurance Policy shall be taxable under this head. It means, to be more specific, the amount can be taxed under this head only when the company takes the policy in the name of the chairman or a director of the company, because in such situation or in such cases the relationship between the employer and the employee does not subsist. If the employer receives the amount as a Keyman Insurance Policy, under the Keyman Insurance Policy, then it would be taxable as a salary, means that is a profit in lieu of salary, and it would be taxable under section 17. The next type of income is the amount which is received as a gift on or after 1st September 2006 by an individual or HUF means Hindu Undivided Family, means what would be the treatment of that amount when a person or an individual who is getting the amount by way of gift. The provisions are like that. If an individual or HUF, he receives a gift on or after 1st September 2006 by number 1 cash or demand draft or check or by way of credit, otherwise then in consideration of the goods or services received or by any other mode, then it shall be construed as an income under the provisions of subsection 24 of section 2 and shall be taxable under this head, that is the income from other sources. It means the law is very clear. If an individual or HUF, he receives the amount as a gift and the amount is remitted to a person, given to a person by way of cash, check, draft or by way of credit, which is otherwise then as a consideration of goods or services or any other mode, then it shall be construed or it will be considered as an income under subsection 24 of section 2, and when it is treated as an income, naturally it will be taxable under this head. Now, however, the exemption of rupees 50,000 per year has been given under the provisions of the Act, but if any person receives the amount exceeding 50,000, then the whole of the amount shall be taxable. So the law is very clear. If you are just receiving an amount less than 50,000, means up to 50,000 you are receiving it, then the whole of the amount would be exempted. But if your aggregate of amount is exceeding 50,000 rupees, then the full amount shall be liable to be taxed under this head. And this particular concept can be explained with an example. Just see it. In my example, Mr. X receives rupees 52,000 from his friend Y as a gift during previous year 2007-2008. So in this case, the entire amount of rupees 52,000 shall be taxable under the head other sources. Had this amount been 49,500 or 50,000, then the whole of the amount would have got the exemption. Since the amount is exceeding 50,000, then the whole of the amount which is received by Mr. X as a gift shall be liable to be taxed under the head income from other sources. However, in respect to the genuine cases, just to prevent the hardship in respect of some genuine cases, some of the sums, some of the amount shall not be considered as income under section 2. So what are those cases? Number 1, you just see it at the board. The amount which is received by or credited to the account of individual. It means in the following cases, just to prevent the hardship of this section, the exemption has been given. It means there shall not arise any gift if the transaction falls under any one of these categories. Means individual from a relative out of natural love and affection. It means if an individual gets the amount from the relative out of love and affection, then it shall not be deemed to be the income under section 2, subsection 24. The second case is if an individual receives the amount under will or by inheritance. Third situation is when an individual gets the amount on occasion of marriage, and this can be from a relative or a non-relative, it doesn't matter, it will not be deemed to be the income, and accordingly it shall not be liable to be taxed under this head. And gift which is received in contemplation of death of a payer. This is also a very, very important situation. In such a situation, means when a person is getting the gift from another person who is just contemplating the death, in such a situation, it shall not be deemed to be the income under subsection 24 of section 2. And money which is received from the local authority. So these are some of the situations under which the provisions of subsection 24 of section 2 shall not apply, and accordingly the amount received by the individual shall not be deemed to be the income, and accordingly it will not be taxed. Now the last type of income is the income from subletting of house property. Generally, the income which is derived from the letting of house property is liable to be taxed under income from house property. I think this is a separate head out of 5 heads which I have explained to you. This is the second number of head, income from house property. So if an individual is deriving any income from the house, naturally it would be taxed under this head, income from house property. Now if the income is derived from subletting of the house property, then in such a case the income shall be taxed under this head, that is income from other sources. But for computing the income under this head, the expenses such as repair, depreciation or insurance premium, that would be allowed as an expense while computing the income. So these are the 8 heads which we have discussed. So how the treatment is made under the provision of the Act, particularly under this head, income from other sources, that we have discussed in detail. Thank you very much.